Did you ever imagine how much dividend income will $100,000 generate? If you're thinking about retirement and you're young, $100,000 is a good amount to start with. But how much money can you expect to get from it? Could it be enough to help pay for your car or your house? Or maybe even cover some of your retirement expenses? It might even give you a sense of security to see money coming in regularly, whether you're working or not. At the end of this video, you will be surprised how much dividend income you could get from that $100,000. So make sure to watch the full video, and don't forget to like and subscribe for more videos like this. How much money you get depends on where you invest your money. You can invest your money in a big fund that follows the whole S&P 500, or you can buy individual stocks that pay out dividends to grow your money. You could also do a bit of both. The amount you get from dividends changes depending on how risky your investments are and when you plan to retire. Don't just put all your money in investments that pay you regularly before you retire. These types of investments, like stocks that pay dividends, don't usually make as much money in the long run. They're from big, established companies, not new ones that grow quickly. Having a lot of regular income might seem good, but for younger people, it doesn't matter much. If you invest your $100,000 into a special savings plan that follows the S&P 500, you'll get some money back regularly. This plan is not just for making money, but it's also for growing your investment slowly. Right now, the S&P 500 gives back about 1.5 cents for every dollar you invest. So, if you put in $100,000, you can expect to get $1,500 every year, which is about $125 every month. They usually pay you this money every 3 months, so that would be $375 every 3 months. The money you get from dividends isn't super big, but overall, you can expect to make around 10% each year. This kind of dividend money is great for regular people who invest because it gives them a good mix of money coming in regularly and their investment growing over time. Even if someone uses up all the money they get from dividends, they'll still see their investment grow a lot over the years. If you want your money to grow faster, but don't mind getting less money back regularly, then you can invest your money in the S&P 500 Growth Fund. This fund invests in the companies in the S&P 500 stock market index that are growing really quickly. It's good for people who are not planning to retire for a long time and don't need to rely on getting money regularly from their investments. When you invest in this kind of fund, you might not get much money back in dividends. Dividends are like little payments the companies give to their shareholders. In this case, because many of the companies in the fund are technology companies, they don't give out much in dividends, maybe only about 0.5% of what you put in each year. For example, if you invest $100,000, you might only get $500 back each year, which is not much at all. It's just $41 per month or $125 every 3 months. But even though the dividends are small, the value of your investment can grow a lot. That's because the companies in the fund, like Apple, Microsoft, Tesla, and Google, are growing quickly. They don't give out much money in dividends because they prefer to use that money to make their businesses even bigger. So, if you invest in this fund, your money could grow faster than if you put it somewhere else. If you only get 1/3 of your money back as dividends from the S&P 500, you need to invest 3 times more to get the same amount of money. But because the S&P 500 grows a lot, you could get to that point much faster. If you want more money from dividends and don't care if your overall profit is lower, you can think about investing your money in the special fund. One example of this fund is the SPDR High Dividend S&P 500 ETF. This fund includes companies from the S&P 500 that pay out lots of dividends. These funds usually don't grow in value quickly because the companies in them focus on making steady profits and paying dividends instead of growing quickly. Remember, if you choose to get dividends from your investment, you might not make as much money as if you invested in something that grows quickly. This kind of investment is best for people who need money for retirement right away and can't wait for their investments to grow a lot before they use the money. Some people like to buy stocks that pay them dividends. They look for stocks that have a good record of paying dividends over time and expect those dividends to keep increasing. They also want the company's profits to grow, which should make the stock price go up too. A stock that gives you dividend at a rate of 10% seems good, right? But if its price keeps dropping by 20% every year, it's not a good choice to invest in. New investors might be attracted to the high dividend rate, but it's not worth it. Buying individual stocks is risky, but it can give you a chance to make a lot of money. That's because the price of each stock can go up a lot. Sometimes, you can find a stock that's cheaper than usual, which is a good deal. But be careful, some stocks are too expensive. It's easier to find these good deals with individual stocks because their prices change separately. When you buy funds, it's harder to find good deals because all the stocks are priced together. That's why many investors prefer buying individual stocks. Imagine buying a house that needs a lot of work but costs much less than other houses. This house has the potential to become much more valuable if you fix it up. It's like choosing to buy this cheaper house instead of a perfect, expensive one in a fancy neighborhood. For example, one company called Altria Group. They make tobacco products for adults in the United States. Altria Group is one of the companies in the S&P 500 that gives out highest dividends to its shareholders. Altria Group pays a dividend of 9.47%. This means if you own their stock, you could get $9,470 every year, or about $790 each month as extra money. That's quite a bit. Even though Altria Group doesn't make a lot more money over time compared to other similar companies, many people like owning its stock because of the dividend. They hope that the price of the stock will also go up, so they can make even more money if they decide to sell it later. It's not a good idea to put all your money into just one thing, but Altria Group can give you money without you having to do anything. If you have about 10 different good companies in your investments, there's a good chance that one of them might go on sale sometime. That means you can buy it for a cheaper price and get a good deal. The money you get from dividends in this portfolio isn't a lot, but some folks might feel okay with it if they have other money coming in, like from a part-time job or Social Security. Social Security usually pays around $1,500 each month, so getting a bit more cash from dividends can be nice for spending. Before we go further, if you are interested in earning from YouTube without showing your face or without making videos by yourself using artificial intelligence, like the video that you're watching right now, then I have a special free training for you. Check the first link in the description below to get instant access. Maybe a couple who own their home and don't spend much money could be happy living on Social Security payments. They might also get some extra money from dividends. If one of them works part-time for 20 hours a week, they could earn about $1,000 every month. Adding dividend income to that could be helpful. They could use this money for things like travel, saving for holidays, or paying a small part of their house loan. Even though the amount of money they get isn't a lot, if they keep investing the dividends, it can grow a lot over time. Younger people are also interested in investing in dividends, but they need to think carefully about their goals to make the most money in the future. Should you put your money in things that give you regular income, like bonds or stocks that pay dividends, or in things that might grow a lot in value over time, like stocks that are growing fast? A big fund that follows the whole market, like the S&P 500, could be a good choice because it gives you a bit of both. Think about how much money you could get from dividends with each type of investment. Then you can figure out the best plan for your money and how much you need to reach your income goals. If you enjoy this video, then I think you will enjoy this one as well. Thanks for watching.